Welcome back, traders, to a new video. Today I want to be talking about the stock Tesla and options on Tesla, especially in this period right now, right after earnings, where the stock has ran a lot. And by a lot, I mean a lot. Right after earnings, which happened 10 days ago, the stock ran almost 400 points. It went from 850 all the way, a little bit more, maybe like around 850 to 1224. And that is insane. That is almost a 50% increase in the stock itself. And because of this, there has been a lot of volume and a lot of people wanting to trade it, and that is perfectly fine. However, this means something bad to options. Now, something I want to talk about specifically is yesterday's options, and yesterday was Monday. So if we go to 2 days, and let's look at yesterday's. So this is the stock on the right, and this is an option on the left. This is the 1200 option. So, if we're trading somewhere, in this area, the stock is around, the option is around $1,500, which is a lot. Well, before we even get into this, let's look at the option chain itself. The option chain prices are insane. And the reason for that is because a lot of people are trading it, and because there's a lot of volume, a lot of more people are trading it. That means the price is a lot higher. It's like an auction. The more people there are, the more interest there is, the more expensive it gets. And as you can see, they even added a lot more strike prices. All of the open interests that are zeros, that means that these are brand new strike prices added very, very recently, today or yesterday. So all of these are brand new. As you can see, there's a lot. All of the ones where you see a number of the open interest, that means they have been there a while ago, and that makes sense. As you can see, it looks like it went by an increment of $25. 1200, 1225. This is 1250. Yeah, and these are in the middle. They added that are brand new. Again, why? Because the stock is running so much and there's so much volume, they have to add more. And look at this volume. This is just today, and it's only 1 p.m. The market's only been open for around 3 hours. 85,000, 16,000, 17,000. There's a lot of volume here. And again, because of all of this volume, that means all of these options are increasing. The prices are increasing. These are getting expensive. Not a lot of people can afford them. But the spreads are still tight, as I teach all of you. Make sure the spreads are tight, open interest is high, volume high. That you don't have to worry about because they're extremely high. And the spreads are very tight. And again, the spreads are tight is because there's so many people trading it. The bid and the ask are so close together because there's so many people in there. So the spreads are fine. Everything's fine as I teach you. But then we get to a different issue, and that is implied volatility. It's not something I talk a lot about. It's not something that I look into a lot. And the only reason I looked into it within the past few days is because of Tesla and how much volume it has been getting. Now, before we get too technical in it, let me just explain it in a very easy way to see. I synchronize my crosshair, so everything that I'm seeing here, you could see it on the other chart as well. So if I'm pointing here, you could see, if I'm pointing here on the option strike price, you could see where it's pointing at exactly on the stock price. So a very big issue I had is a lot of people came to me and said, Mark, I got in Tesla. I held it for like an hour or two. The stock went up 20, 30 points, but I am still down. Why? Well, let me explain, first of all, how that happens. So if we look at here, this peak right here, which translates to this peak right here on the stock itself, we see that after that, it went down a little bit and then it consolidated. And then if we look at, so let's say you bought the options around here. So for you to even make back your money, so just break even, you had to sell right here, approximately right here. And after this, the stock went from 1140 to 1152. That is 12 points. So the stock had to go 12 points for you just to make your money back. And this wasn't even that long. This was from 952 to 1056. So around an hour. That's not that bad. And this was Monday, so it's not like it's close to the end of the week where you have to worry about expiration date and data. This is on Monday. So as you can see, not looking too good. Now, another thing I want to show you is, as you can see, the stock did start pushing a little bit here slowly, but it did push a little bit. So the stock went from 1152 to 1170, so, approximately 18 points to the upside. So, you should have been making money on options. However, if we look at this, so this move is this move right here. Let's actually do it from this move to this move right here. Let's do like that. And then let's draw the same thing on this side so that you can see it visually. So let's draw it on this side as well. So it was this move, right? I did it like at the peak. So let's do there. And it was all the way to here. Now, what I do want to show you is how much, as you can see, the slope here is a lot more steeper than the slope here. And now, what does this show us? This shows us that the stock price itself increased more steeply than the option price. And usually it's usually the opposite. Now, if you look at a different position where the stock increased a lot more steeply, so let's take out this. So let's do it from here to here. You know, this was a very nice steep, and then the same thing here. We see that here it's actually the total opposite, where the stock increases, where the option price increases a lot more steeply than the stock price. So what does this tell us? This pretty much tells us that A, you can't hold Tesla for too long because you're just going to get destroyed. Second of all, you have to wait for these very big breakouts, breakouts like this, where it's actually breaking out tough, where on these breakouts right here, it's very hard to make money. Potentially, you could even lose money because of how volatile the stock is. So now another issue was right here was, if you purchase somewhere here at the bottom, let's say even if it was the topping, and then sold it right here, as you can see, that was a pretty nice move. But translating it to the options, it's right here and then right here. Look at this. The option barely moved. I mean, from here to here, barely anything compared to the stock itself. Now, you could be asking, well, Mark, how does this, why is this happening? How can you explain this? How can I know, when's a good time to get in and get out? Well, first of all, I would say don't hold it too long, as I said. And pretty much if you're in it, try to enter in on a breakout and sell it on a pop. Don't hold it. It is very risky to hold it. The reason this happens is because of implied volatility, which is given in a percentage format. Now, I'm going to give you a definition that was given by Daniel, so I'll put in quotes. Now, I'm going to put up a definition of what implied volatility is, and Daniel actually made this definition, so I'll put it in quotes. This is by him. Implied volatility is the market's expectation that an option strike will be in the money by expiration. The more volatile a stock, the more expensive an option contract is because of the higher likelihood or expectation that the option will be profitable. This expectation can change quickly within the same day based on momentum and price action. The further out of the money and or the closer the expiration date the option is, the more affected you are by IV. So how does this explain on what's going on with, these trends? Pretty much what this means is when a stock, for example, at the open, the IV is high because the stock is moving, pretty quick, it's going to the downside. So the IV starts increasing because people think that, oh, Tesla's moving. It could move somewhere, to the downside, for example, in this case. But then later on, Tesla was very slow. So then people said like, okay, Tesla's very slow today. Maybe won't be able to reach that expectation of a strike price no matter what it is. So then, because of that, IV started to drop, meaning that the price of the contract started to drop as well. Now, you don't see a drop on the contracts because Tesla itself was grinding out slowly by slowly. So that's the only reason that it was keeping up the options, somewhere and not just decreasing the options. If Tesla was just flat out, options would most likely be decreasing. But then on a breakout, such as like right here on the stock, this big green candle or like these green candles, people saw that, oh, Tesla can run, maybe can reach that expectation. And then the IV started to go up more, the percentage started to increase because now it can most likely reach to that strike price. So in this case, the option started to move a lot more rapidly, again, because IV started to increase. So now, what does this tell you? So pretty much what this tells you is you shouldn't hold options on Tesla for a long time because IV can kill you, Even if the stock is just standing in one place or slowly grinding out like it did here or like it did here, it doesn't give a big push towards the options. It barely gives any push at all. The only time it gives a push on the options is on breakouts such as like, right here or right here or right here. Other than that, Tesla's been trading sideways. Now, another thing to look at is this line right here, the purple line, which is the theoretical option price. So what this means is that this is pretty much where the system thinks that the option price should be, but in reality, it's all the way down here. So again, when the market opens, the theoretical price is very close to the price of the option itself, but then it starts to separate a lot because again, in reality, this move right here should have been a lot more steeper, and it should have been a lot more closer to this theoretical option price. However, this isn't even too bad. Now, this option is very expensive. This is around a $2,000 option. I mean, depending where you get it. I mean, let's say you get it somewhere. Let's say you get it right out here. It's like $2,300. If you go even more out of the money, let's say you only have $3,500. So look at this theoretical price right here, and then if we go to the let's see, the 1350, and let's zoom in to the same time frame. As we can see, the theoretical price is way, way further than the actual price. Let's zoom a little bit better so we can see the theoretical price is just out of it. The theoretical price is just way out. But another thing for IV is let's do this. So let's say again, let's look at the same time let's look at the same thing we looked at in the previous strike price, where let's say somebody purchased at the topping here and then they want to sell it, but they just want to break even. For somebody to break even, they got to sell it all the way here, which is all the way here. So this stock already moved over 30 points, and yet in the options you're just staying even. And yeah, a lot of time did go by, but again, this is on a Monday, so expiration date is far out. This shouldn't be happening. Again, this is happening because the IV is even higher. So, it's very hard to trade Tesla with a small account. My only recommendation would be is, as I said before, is if you want to trade Tesla right now, you buy, sell it quick. Don't hold it for too long, because as you can see here, you could be losing a lot of money. Even if the stock itself is going up, you'll still be losing money. And volume and open interest on this are very high. Spreads are very tight. But again, because of implied volatility, it is trading. When the stock trades sideways, there is a lot less action happening, meaning that people don't think that it could reach that price, strike price, meaning that the contracts do start decreasing. So at the end of the day, if you're asking me, Mark, well, what should I do? Should I even trade a Tesla? Should I not trade Tesla? And my answer to that is it is fully up to you. I mean, I gave you all, everything I think about it, and now it's up to you to decide if you actually want to take the stock or not. I can tell you what I'm doing, and I'm not trading it too much. I'm definitely not holding it. I am buying and selling very quick. I mean, last week I entered it, I held it for 5 minutes, and the stock went up, and I still lost money, where I was very close. I barely made even, yet the stock did go up a lot. So I'm trading. I'm trading Tesla. I traded today. I was able to get out successfully. But again, you have to buy and sell very quick. You cannot hold. And another thing is, don't buy the first couple minutes of the open. You have to wait to see what the stock does. Because as you can see, the first few minutes it did push, and there was a lot of implied volatility. But then after it started to grind out sideways, implied volatility drops, meaning that the options will be starting to drop as well. And another thing is, it is better to stay closer to in the money, because as you can see, this strike price is really out of the money, and the IV is affecting it even more, even harder. And I understand that the ones that are in the money are a lot more expensive. That's why I said, it's fully up to you if you want to trade or not. I traded it with very, very little size. Usually I don't buy contracts like these, but each contract was around $1,600. I only traded first I traded 3 contracts. My second trade I only traded 2 contracts. So I'm trading very small size. If you don't have that capital, I wouldn't recommend trading the stock for now, because it is very, very risky. And even if you get in and you might make money, but a little pull can make you very, very red. So thank you so much for watching. Hopefully you did learn a lot. Hopefully I was able to help you. I gave you a lot of tips and tricks on how to trade Tesla. Maybe you don't even want to trade Tesla, and that is perfectly fine. Wait for it to cool down a little bit, and hopefully we'll be back to normal. But this is it for today. Thank you so much for watching. Have a good rest of your day, and I will catch you at the next video. See ya.